Folks, the drumbeat war getting louder and louder with the ground invasion imminent, certainly having an impact on the market, but to what extent, we're not really sure. I want to bring in a Real Talk Capital CEO, Rob Luna. Rob, you know, yesterday we had the 1-2 punch. You had Jay Powell speaking, and listen, I didn't think he was as hawkish as the media said he did, but these headlines started hitting the tape, and at the same time, you also had headlines, greater headlines coming. You know, the U.S. shoots down an attack. All of that thing at the same time, and just derailed the market that at times yesterday looked like it wanted to go higher.
Yeah, look, I mean, Charles, the geopolitical issues out there are in our face every single minute right now, and I think that's putting some unrest into the market. But look, at the end of the day, if you look at the history of the market and wars, it doesn't really have a long-term impact. I think what's really moving this market, you've been talking about it all show, is interest rates, a 10-year pushing up against 5%. And when you get all this noise out there, all these geopolitical headlines, and you can sit in cash and earn 5%, why are you going to be the brave one to go out there and take a ton of risk? It doesn't really make a lot of sense. So what the market's doing right here is trying to figure it out, bide its time, but you're getting paid to wait right now.
Let's talk about crude oil. Now WTI over 90, yeah. The chances of it hitting 100, and just how much exposure should an investor have to the oil patch right now?
Yeah, I think right now, if you listen to Chevron's CEO, they think it's going to 100. It makes sense that it's going to go to 100. The valuations of these companies, I think, are really good. A company like Chevron's paying you 4% dividends. So I think, look, if you do not have some allocation here, I think as an investor, you can play that through an ETF, or you can play it through a best-in-breed company like Chevron. But you should have some exposure here, Charles.
So I saw some of the names that you're buying. One that leaped out at me was Bumble. I remember Bumble, right? Yeah. You know, one of these hot, hip companies. So they go public, and one of the first things they did is they gave everyone a week off. Everyone a week off. I said, you guys are tripping. Yep. It was a $51 stock then. You want to know where it is now? Try $13.47. So you think now maybe they'll start to run the business like a business?
Yeah, I mean, they're going to have to, Charles. And look, I think they've got a big ownership interest from Blackstone. I think Blackstone's going to be putting some pressure on them. Why I like them, and a couple names I'm buying right here, is some of the big names like Blackstone on some of these IPOs that came out over the last few years. They're in at much higher valuations. So the incentive for them to turn them around so they can get their money out of it is very high. Look, it's probably not going to do good in the next day or 2 days, but at these valuations, you got to step out there and take some risk. Big tech, all those things that have performed really well, that's probably not where you want to be allocating capital if you've got 12 to 24 months.
You know, it's interesting. The last year, and really the last year or so, we saw Meta come out of the ashes, and it was sort of the maturation of the company, and the maturation of the CEO, and maybe that's what they do need. Maybe they need some adult supervision, because it's a pretty intriguing site, a pretty intriguing product. It is also intriguing that you don't like tech. Amoroso likes it. A lot of people like the momentum of it. You got earnings season. They believe those are going to be the names that blow it out, but you say don't chase that performance, right?
Well, I mean, they've done really good, Charles. Nobody wanted it last year. Names like Meta, that's the names that we were getting in last year, right? Can they go a little bit higher? Absolutely. It's not a bad place to be, especially if it's something like cybersecurity. But the name of the game of investing, Charles, is to go against the grain. The favor that you have on your side is if you have a longer-term time horizon. So look at what's going to be good 12, 24 months from right now. It's probably not going to be the stuff that's up 80, 200% year to date. All
right, Rob. Hey, thanks a lot, Rob. Great having you on.
Thanks, man. Appreciate it.